Here's a summary of the Netflix Q3 2025 earnings call transcript, designed for concise reading aloud. Netflix Q3 2025 earnings call summary introduction. We're here today to discuss Netflix's third quarter 2025 financial results and outlook. Joining us are co-CEOs Ted Sarandos and Gregory Peters, and CFO Spencer Newman. Overall business health and opportunity. The business is described as very healthy with significant opportunities ahead. Management feels good about progress on key initiatives, while acknowledging ongoing work is needed to fully realize these opportunities. Key financial metrics and highlights. Revenue, in line with expectations for Q3. Operating income, would have exceeded forecasts absent a Brazilian tax matter. Engagement, remains healthy, achieving record share of TV time in the US and UK in Q3. Advertising, experienced its best ad sales quarter ever, and is on track to more than double ad revenue this year. Live offerings and games, continuing development as emerging capabilities. The Canelo-Crawford fight was highlighted as the most viewed men's championship fight this century. Progress is being made on playing Netflix games on TV. Content hits. K-pop Demon Hunters was a massive success, becoming Netflix's most popular film ever and demonstrating their ability to create cultural moments. The company has announced global co-master toy licensees Mattel and Hasbro for this property. Lowlights, Brazilian tax matter, a significant, albeit one-time, expense impacting operating income. This is a gross tax on outbound payments in Brazil, impacting service payments not involving technology transfer. While it impacted Q3 results, it's not expected to materially affect future performance. Management's forecasts and outlook. 2025. Strong progress in advertising is expected, with upfront commitments partly landing in 2025 and partly in 2026. 2026 financial objectives, unchanged, focusing on sustaining healthy revenue growth, expanding margins, and increasing free cash flow. Full-year guidance for 2026 will be provided on the next earnings call in January. Advertising growth. Upfront commitments more than doubled, and programmatic advertising is seeing even higher growth rates. While no specific 2026 guidance was given, the growth trajectory is viewed positively. Advertising priorities for 2026. Focus on making it easier for advertisers to buy, increasing advertiser diversity, adding more demand sources, improving ad sales capabilities, and iterating on ad formats, including interactivity and enhanced AI capabilities. Content slate. A strong Q4 is anticipated, with a phenomenal slate for 2026 including new seasons of popular shows like Bridgerton Beef and Emily in Paris, alongside major films like Greta Gerwig's Narnia and Here Comes the Flood, starring Denzel Washington. Gaming, a deliberate, less is more strategy in a few key genres, including immersive narrative games based on IP, kids games, mainstream titles, and socially engaging party games playable on TV using phones as controllers. Investment will be ramped judiciously based on demonstrated returns. Gen AI, significant opportunities seen across content production, advertising, and product experiences to improve productivity, innovation velocity, and deliver better results. They are proactively integrating these technologies and making targeted investments. Significant risk factors. Competition. The entertainment landscape remains intensely competitive, a factor Netflix has always embraced and thrived on. Industry consolidation. While acknowledging potential industry reshaping, management believes current consolidation trends are not fundamentally shifting the competitive landscape and do not alter their view on the core challenges competitors face. Third-party content accessibility. While original content is the primary driver, Netflix has historically navigated ebbs and flows in third-party content access and is not dependent on any single supplier. Most important statements from management, co-CEO Gregory Peters. We think the business is very healthy. We feel good about our progress on our key initiatives. We have a lot of opportunity ahead of us, and we have a lot of work we need to do to accomplish and fully realize those opportunities. He also highlighted the company's crawl, walk, run model for advertising, stating they are now squarely in the walking phase. Co-CEO Ted Sarandos. We continue to have a massive opportunity since we are only about 7% of the addressable market in terms of consumer spending and only about 10% of time spent on TV in our biggest markets. So there is enormous room for profitable growth in the core business. He also emphasized that AI is going to help us and help our creative partners tell stories better, faster, and in new ways. We are all in on that. But we are not chasing novelty for novelty's sake here. We are investing in what we believe delivers value for creators and members alike. We are not worried about AI replacing creativity. We are very excited about AI creating tools to help creativity. CFO Spencer Newman, regarding the Brazilian tax matter, he stated, "The first is that the contribution for intervention in economic domain is a unique tax. It is a mouthful. No other tax looks or behaves like this in any other major country in which we operate. Secondly, absent this expense, we would have exceeded our Q3 2025 operating income and operating margin forecast, and we do not expect this matter to have a material impact on our results going forward." He also reiterated that for 2026, our financial objectives are unchanged. Look to sustain healthy revenue growth, to expand margins, and increase free cash flow. Conclusion: Netflix is optimistic about its current position and future growth, driven by strong content, expanding advertising, innovative new areas like gaming and live events, and a strategic approach to technology.